Hello and welcome to Business News America's webinar on the new era of Latin America's relationship with China. My name is Sebastián Pérez Ferreiro. I'm the managing editor at BNA. With me to talk about the dynamics of the region and its key trading partner are Cynthia Sanborn, director at the Center for China and Asia Pacific Studies at Peru's Universidad del Pacífico, Francisco Flores, co-chair of Winston and Strawn's Esoteric Finance Practice, and Brian Nogy, Director and Team Head of Natural Resources in Latin America Corporate Finance at Sumitomo Mitsui Financial Group. Welcome, and what better way to kick us off than to talk about what is arguably the biggest development of the year for Latin America and perhaps for China as well, US voters sending Donald Trump back to the White House for the 2025 to 2029 term. On the campaign trail, Trump proposed to drastically increase tariffs on foreign goods entering the US. Specifically, he promised 60% tariffs on all imports from China and 20% on goods from other countries. He's even talked about taxing imported cars with a 200% rate. Along with putting Mexico's nearshoring boom at risk, these protectionist policies would hurt Chinese exports, which might be diverted to Latin America, disrupting the local economies. Let's begin with you, Cynthia, and how you see the impact this will have on Latin America and its relationship with China, starting on January 20th, when Trump is sworn in.
There we go. Thank you very much, and thank you for inviting me. Well, as you said, it's a pretty big deal for everybody in the region as well as the rest of the world. And I think we're probably not going to have to wait till January to get some signals. I mean, China has already responded, not only the head of state of China congratulating Donald Trump, but MOFCOM, the Ministry of Foreign Trade, already reaching out and to Trump and to the Trump team to try and talk about these tariffs and the ways to make a deal. So I think we may even see some noise beforehand, but certainly it's of concern to Latin America. Those of us that have free trade agreements with the US, in theory, should feel protected by this, but we don't know what's going to happen. And certainly it affects the ability for us to be involved in three-way trade with China and the US.
Okay. Francisco, how do you see this playing out geopolitically, especially in the Mexican market?
Well, I think it's a new set of rules that is going to apply, even though President Trump was already president in a prior term. This time around, he's likely to have control of the U.S. Congress, which he didn't have before. He has had experience, and he doesn't have any more elections in the horizon. So there is no more positioning or thinking about the ramifications of some of his policies will have on his next race to the White House. So that gives him a lot more freedom to implement some of the policies that some people might think are more extreme or less orthodox. Having said all of that, I think the effect of the Trump presidency on each Latin American country will depend on how high that country is in the list of priorities for the U.S. There are some countries in Latin America that have had historically relationships with China, and they haven't felt much pressure or any pressure from U.S. administrations because they simply are not seen as a strategic or with a high level of importance for the U.S. There are other countries, however, such as Mexico and Chile, who have received and Ecuador, who have received a great deal of pressure as their relationship with China strengthens, and that has to do with the perceived importance that those markets have for the U.S. For Mexico in particular, this is a time of great uncertainty because, in addition to the Trump presidency and all the rhetoric that President Trump said during the campaign, Mexico is undergoing its own internal transformation process, and that creates internal dynamics that may create additional conflict or friction with the Trump administration. In fact,
you're speaking about the recent judicial reform, right? And how it might generate friction in the upcoming USMCA review in 2026.
That is correct. The recent judicial reform that is having a great impact internally, but also has a great impact on the businesses and markets that deploy capital and are participants in Mexico. I can tell you from the private sector perspective, that the judicial reform has caused clients to start asking a lot of questions about the impact it's going to have on their operations in Mexico, as well as their contractual rights and relationships in the market. So that you have two big processes, political processes that are transformative in both the US and Mexico, and at this point it's uncertain how they're all going to play out. But what it's true, and what we've already seen, is that it's creating a lot of uncertainty and having a big effect on the markets, not just the equity markets, but capital and debt markets as well.
It certainly sounds that way. Brian, what's your take?
Well, I want to speak just from a banking perspective and not from a political American perspective. But I would say, realistically, there's a lot going on within the world in general. So I don't know how much of a focus Latin America will be for the administration, maybe Mexico, obviously, but I don't know if there's going to be, like, say, for example, a new Monroe Doctrine, where we're just looking and saying, like, how is this hemisphere going to be related to the United States? I mean, obviously, when it comes to commodities, I could say that the United States has an interest, obviously a vested interest, particularly with minerals now, that I could see that continuing to trend forward. So obviously, as you pointed out in your reports as well, China's been such a large investor, particularly in Latin America. How does the United States sort of play a role in that? So maybe you could see something directly on that, but I think it's very early stages for us to say exactly what the impact will be. Obviously, there's a lot more uncertainty that we know of for sure. But let's see, like, who will be focused on foreign affairs within the administration and who the Secretary of State is. And once those things start to be filled in, I think we can get a much better picture of, the potential impacts. But obviously, it's still like China versus the United States. But how does that play out within the region, I think, is a little bit early to say.
Right. And to get the pure political perspective, I'm going to go back to you, Cynthia, wondering how Latin American countries can engage with both superpowers constructively. Particularly when certain Latin American administrations have more ideological affinity with one over the other. I'm thinking Argentina's Javier Milei with Trump and Brazil's Lula with Xi Jinping.
I'm going to say avoid politics. That's what our governments have to do. That's what they've been doing. With a few kind of outliers like Venezuela or Nicaragua, we tend to have good, strong trade and investment relations with both China and the U.S., and especially the South American commodities exporters and those that export commercial agriculture. We're exporting to China a lot. We're exporting to the U.S. other things. We're receiving investment. China is not the number one investor in the region. It is an important one in critical minerals, as Brian said. But I think our heads of state, Milei has already walked back some of his rhetoric, and particularly since subnational governments in Argentina can make their own deals. And, there's a huge amount of Chinese investment, not only in lithium, but in renewable energy projects in Argentina right now. Milei can't afford to alien all of that, right? And of course, our governments and the government of Chile and others are working with both. And I think the idea of remaining non-aligned and focusing on trade and investment and not getting into geopolitical tensions is very important to the extent that it can be done. And as was said, I mean, it'll depend on how much the U.S. has time or interest in leaning on countries in Latin America, as opposed to some of the other things they have on their agenda.
Right, because it's not like China telling Latin American countries you're either with us or with Taiwan, right? They can navigate both. Francisco, do you agree that's a smart play?
We've been with Taiwan for a long time, most of them, so it's done. Go ahead, sorry.
Francisco, do you agree that's a smart play for Latin American governments to remain neutral?
I think it's a smart play to remain neutral, but I think the question is going to be whether they will have the ability to do so, right? If President Trump decides to focus on an issue that affects, for instance, the Mexican automotive market, right? Regardless of whether President Sheinbaum's administration would like to remain neutral or not, right? If President Trump makes that a priority of his agenda and it's going to have direct impact on that market, well, then the ability to remain neutral just goes out the window. I think the markets are already discounting some of it. Yesterday, most of the major indices were up, with the news of the victory of President Trump. However, the stocks for some of the major automotive companies were down because people are discounting that this is going to become a central part of the trade agenda for the new U.S. administration. So I think that's one of the uncertainties that is being created by this. How you at some point you're going to become a country might become at the mercy, or might be at the mercy of the agenda and the priorities of the two world superpowers, which are the U.S. and China. And so I agree that the government should try to remain neutral. The question is, if the circumstances force you, how do you navigate the tension between those two superpowers? The other aspect of it is the starkly different styles that you have for each administration. President Trump is a business person who is used to negotiating in the private sector and who is used to having or utilizing a wide array of techniques that don't necessarily comport with someone who may be a career politician. The Chinese side tends to be more act within the canons of what you would expect somebody who has been in government or in politics their whole life. And so even though substance always, people always want to focus on substance, and that is the right approach, styles sometimes matter. And so how do you navigate those two styles? And when the pressure increases from either side, it's going to be a difficult balance to try to achieve.
That's the key question. Okay, let's move to critical minerals and other commodities. Cynthia, you're leading a project analyzing the implications for Latin America of China's energy transition. Can you tell us more about that and what you're finding? I think we lost you. I think you're on mute.
This year, we're really jumping into that issue, which our colleagues in Argentina, Chile, and Bolivia already know in terms of being lithium reserves. But we're really looking at the energy transition in China, what it means for Latin America, not only in terms of demand for critical minerals, which we know a lot about, but what it means in terms of Chinese development finance for our own energy transition, investing in alternative energy sources, in value-added industry in our region. And we're working with people in Argentina, Chile, Colombia, Peru, and China, with colleagues at the University of Peking, right, to try and kind of work together. Of course, we have the problem that every country in Latin America wants its own lithium battery factory or wants its own EV production factory. And, other than Brazil and Mexico, the rest of us are, sort of have some unrealistic expectations, I think. But we're looking also on the ground at Chinese investments now, not only in lithium and copper, but in alternative energy sources, which are significant in some countries like Argentina.
Can you share what you're seeing, if there's a trend you're starting to see?
Yeah, I mean, we're seeing new companies that we're not used to dealing with. For example, in energy, we have also Chinese investment now in the whole chain of production energy in our countries. We're seeing companies that aren't used to working in Latin America as much as, say, the large Chinese mining companies. But they are reaching out to like the law firms and the consulting firms that others reach out to. I mean, I think they've learned somewhat from the previous experience of other kinds of companies. And we're really focusing on to what extent are we able to maintain certain transparency and regulatory standards over these investments. And I think so far it's been pretty interesting. Just getting started with researchers in each country.
Okay, well, we will be following up with you then on that. That sounds fascinating. Brian, how do you see China's need for critical minerals and other commodities evolving, and how could this affect project financing overall across the region?
Sure. I think it was something interesting they said about, countries looking to like originate, but also be able to produce, and I think a good example of this is over the past, 15 years, Indonesia went through a process where they were at one point just exporting like pure nickel and now have, upgraded to actual having like, more processed nickel where you're in the value chain at that point. I mean, maybe that's something that could be considered. I don't know if you're familiar with how Indonesia went through this process, but they set up special economic zones where they were able to then take the primary nickel and then process it and then export it. And it was the first time they did it in the early 2010s. It wasn't very successful, but the second time it actually worked out quite well for them. So I don't know if that's something that could be replicable in some of these countries when it comes to lithium in particular, given the scale and cost. But overall, obviously, critical minerals, again, if you're looking from a perspective of what China controls already, obviously, you're talking, 80+% of the markets in general, particularly rare earths in general, which continues to be a concern geopolitically also, because rare earths are a lot of different things. But realistically, again, maybe this is something, and again, depending on the view of the United States, do they want to get more involved in this and say, well, if you're exporting 90% of this material to China, why can't you send some of it to the United States as well? That's something that may happen, to be honest. Again, early days
particularly
in
with
the
Beijing.
administration.
Yeah.
Yeah, I mean, but the thing though too is also in the United States there are projects that could be operational or permitted very quickly. So if those permitting situations speed up, I mean, there could be developments in the United States or Canada, and then obviously Mexico uniquely situated for rare earths as well, just given the location. So I feel like geopolitically, there is a need, and I think it's the West in general, including Japan, obviously I represent a Japanese bank, where they're looking for these critical minerals more so, and trying to like figure out how they can peel some of that off away from China.
Got it. Francisco, can you talk about China's strategic lending policy and its implications for LATAM, whose developing countries are increasingly indebted to Beijing?
Right. So the relationship of China with Latin America, it sort of went through stages, right? Initially was primarily trade. That continues to be a strong component of it. But then it evolved into China becoming a lender for a lot of the jurisdictions within LATAM. And at the beginning, that lending was primarily for infrastructure projects, large scale, which that continues to be the case. But more and more, Chinese lending activities are focused to maybe smaller projects, but and more diversified industries. That level of lending has sort of tapered off and diminished in the last few years. A number of reasons is one is the issues they're having with payment from some jurisdictions like Venezuela and others. The need to work out some extensions or additional terms, etc. Also, those a lot of that lending activity occurred in the later part of the cycle when some of the interest rates started to tick up and become higher. Now we're entering into a new era of what appears to be interest rates that are trending down, or a lower interest rate environment. And I think the question is going to be whether some of the private sector lenders can become more active in the region and will be willing to refinance some of the positions that China has. In addition to that, there is concern in a number of Latin American markets with how much indebted they are to the Chinese government. The issue there is that a lot of the lenders from China are state-owned companies or state-owned banks, and there is a concern that if they are in key sectors, they may behave differently than a commercial bank. Their set of priorities and their stakeholders and constituents are not necessarily just commercial investors or commercial interests. They have other political interests who are at play. And so some governments are reticent to have such a large influence and such a large position with a lender that may not behave in a way that you would expect a commercial lender to behave. And so all of those are considerations that are being taken into account. But I think in general, the level of lending has leveled off, and it remains to be seen whether that trend will continue or if China will start retreating on its appetite for debt positions in the region.
Cynthia, you're in Peru, where Chinese firm COSCO Shipping Ports is wrapping up construction on the Chancay Deepwater Megaport, which was adopted as part of Beijing's Belt and Road Initiative, and is poised to become the most important port in the South Pacific and required an total investment of $3.6 billion. Tell us how you see the project expanding Latin American trade with China, and if it's indicative of an increasing Chinese role in building infrastructure across the region.
Okay, well, I wanted to differentiate between public infrastructure and private, which this is technically, because as Francisco was saying, there's a lot of concern about public lending and support for government projects. But in fact, in countries like Chile, Peru, I think Colombia as well, most of the public infrastructure projects are open competitive bidding. The Chinese are competing with other major construction firms. They're not winning things. We don't have any G2G projects with China, for example. I don't think Chile does either. So I think there have been countries that have avoided giving the Chinese a preferential treatment without going through the usual competitive process. That said, the Costco port was born as a Peruvian private sector initiative. Former retired Navy officers within local investors, a local company has 40% of the shares. They went out looking for partners. They said they didn't find any partners in the West. They came back with Costco, which is, a huge, a huge partner. And since this has been adopted as part of Belt and Road, it's true. And but it is a project that was not initiated by the Peruvian government, and the Peruvian government is running to catch up in terms of regulation and other issues. That said, it is a huge project. It's the first phase is to be inaugurated next week. There's a lot of interest in the region outside of Peru to make use of this port. We're still seeing who's going to end up doing so. I mean, for Brazil, we have a lot of skeptics here about to what extent it actually is cost beneficial for Brazil to, come across to the Pacific rather than the Atlantic. But for Ecuador, for the north of Chile, for some neighboring countries, Colombia, perhaps it will be a big contribution. And certainly Peruvian exporters are gearing up for the possibility of having much faster shipping time, lower costs to get things to the Asian markets.
Francisco, what can you tell us about the overall state of the Chinese economy right now?
Well, giving a view or an opinion on the Chinese economy is always a bit tricky, simply because their economic data is opaque, right? The numbers coming out of China always seem to be very optimistic, and they always seem to be better than some analysts will expect. So they were experiencing high levels of growth, as we all know, for long periods of time, between 8, 9, 10% on an annual basis. That has tapered off recently. Last year it was 5%, which for an economy like the Chinese that was experiencing double-digit growth, that is a significant decrease. Not only that, they were having a big debt issue. They were over leveraged, and so typically when an economy is over leveraged, it takes a while for that over leverage to be processed through the system. So it seems to me that issue, that shock to the economy, is still working its way through the system. And so currently, I think China is dealing with an economic slowdown. 5% growth rates are enviable for any economy in the world, but compared to what they used to have, it's not at the top of the range that they were used to experiencing, and they are working through their over leverage issue, and yet there's still an economy that is outward focused. So given all those factors, I think that for a region like Latin America, how the Chinese economy reconfigures and how does that debt impact the allocation of resources within the Chinese economy is going to have an impact on the sectors that China is going to invest to in Latin America. But nonetheless, given the outward focus of the Chinese economy, I think that we can expect China to continue to invest and prioritize investment in the region, and to continue to have a big appetite for all the raw materials and other exports that are coming out of Latin America.
Okay. Brian, I'll end with you. How is this Chinese economic slowdown affecting commodity prices and investments in the commodity sectors in Latin America?
Sure. I want to highlight one thing, and we could probably talk about this for a few hours, but peak gasoline, just consider peak gasoline is going to probably be in China within the next year and a half because of the fact that they have all these renewable vehicles now. So if you were thinking, well, does it make sense for China to invest in oil and gas like externally for their own, to export back? I mean, does it? Will it make sense going forward? Especially if you have long dated like 10-year projects. So I think given what's happening in China domestically as well, you have more unemployment, youth unemployment, people not working, some deflation, all these things they've never experienced over the past 20 years. So I would say the Chinese economy in general is in a very big state of flux. How will that relate to commodities? So oil and gas already, I think maybe you're going to see less investment, but for minerals, all these minerals are necessary for everything that they want to do, be it technology, data centers, renewables and electric vehicles in general. That is where you're going to see, and obviously food, right? Yeah, everyone needs to eat. So all these things are going to be driven by China still. But when you look at energy, I think we're in a weird state where we don't know what's exactly going to happen with energy. But I think for minerals and soft commodities, I mean, par for the course.
Okay. Well, I think that's a good place to wrap up our conversation. I want to thank all three of you for sharing your insights on this key topic for Latin America. As a reminder, Business News America subscribers can find the full report on the new era of Latin America's relationship with China on our platform. Non-subscribers can go to BNamericas.com for more information. Thanks for listening. Goodbye.
Thank you.
Thank you.